Hi, good afternoon, Laddie.
Wow.
It was just a phenomenal jump at intraday. When I checked, I was like, did I see correctly? Because 2.93%, and it was still climbing at the time I checked.
Almost 3%.
And it 3,000 points to 87,000 points. Because we closed yesterday at 84,000 points, and seeing it at 87, I'm just like, what's happening in the market?
That's incredible.
A very incredible jump. And we saw stocks like Dangote, Sugar, Nascon doing the magic and Transco as well. And wow, I don't have all the details right now, but
the new entries to the SWOT group at this time.
Yes, we saw Gerigo also, crossing that 1 trillion naira market capitalization yesterday. Right. And so a lot is happening in the NGX. Stocks are really on fire, Laddie.
So much. My head can't handle it.
Please, just hold on. Just hold on. Let me just go around it and just talk. So we kick off with major equities. As I was saying with Laddie, sentiments were mostly positive at intraday. Nigeria's NGX all-share index hit another new high at intraday. The index rose nearly 3% to cross the 87,000 points. Stocks such as Nascon, Dangote Sugar, Transco, Lafarge, and Flour Mills have caught investors' interest. Now, let's see the close today. How, if we sustain this momentum, definitely it's going to be in the green, but let's see if 87,000 is going to be sustained. Now, South Africa, on the other hand, is still down nearly 1% at intraday. Well, let's see how that will work out for them at the close of business. But let's look at the northern part of Africa and see Egypt. The NGX 30 is up at intraday 1.13%. Kenya, however, closed monthly session also in the green. Let's check out what's happening at the unlisted equities market. We've been talking about the NGX, but right now I want to see what's happening at the NASD, what's driving sentiments there, if they also getting the fire and the vibe that's coming from the NGX. And we'll joined by Mr. Guaide Longe, Managing Director and CEO, NASD. Good afternoon, sir. It's good to have you on the program.
Good afternoon. Thank you for having me.
Mr. Longe, yesterday we got news that major oil marketers in Nigeria have registered with the newly constructed multi-billion-dollar Dangote Petroleum Refinery and received approval to purchase and sell the fuel. We know that Double One PLC is one of the approved oil companies in that has been in that downstream sector and is listed on the NASD. But we want to know if after this announcement, if there's been any movement in share price for that stock price.
Well, I think that the facts, we should state the facts, and then we can then look at see what the emotion is. So Double One PLC grew by 22%. I would say a simulated return for last year was 22%. That's taking in dividends and capital appreciation. Pardon me, my voice is a bit broken because I have a sore throat. I hope it isn't COVID. This year, Double One has done 9%. Now, I think that in looking at the situation, what we need to assess is what really is the effects of Double One being one of the outlets that will distribute the fuel that's coming from the Dangote refinery. So it's really just a source of products rather than a spike in the distribution process. So I don't think Double One already has a source. It's just that the source is going to be closer to hand than it was before. So I doubt that there would be a difference in the prospects of the company on the basis of the fact that its sources have changed. The prices will not change. The dynamics of pricing will not change, in my view. We should then look at the emotion of what is driving the gains on the equities market. I think it is that people are looking to cover that gap in a real return expectation. And so you would see that people want to buy into stocks as they're rising, so that they can cover the inflation spike with the investments that they make in the equities markets. And that is fueling a lot of demand on the equities market. I believe that in the not too distant future, it will cool. People will take profits and then it will return over a period of time. I mean, and then when the fixed income markets begin to pick up, I think it will pair. So it's a good time to be in equities. I think you should watch the valuations carefully and don't buy on the top.
Definitely don't enter a bull trap. But let's look at the insurance sector. With the news coming in yesterday, the Coronation Insurance listed on the NGX has informed shareholders of plans to delist. One of the reasons given was that the current market conditions were not favorable to raise capital. That's through public equity. We know that some insurance companies, such as IGI, they're also listed on the NESD, but we want to know if this is a widespread concern in for that sector, that industry.
No, I don't think it's a sectorial concern. I think it is just I think it is business enterprises thinking to themselves, what is the value I gain from being on a public equities market or even an OTC market? So it's the name of the game is how can I raise money? So there's a lot of effort or interest being driven into the private markets because the regulatory tedium is less with the private markets, and perhaps with the private markets you're very direct as to where you're going to raise money from. So enterprises feel less of a bother with the public markets, and the success rates of the private markets begin to tip the scale as to where business enterprises are looking to raise money from crowdfunding and things like that. So it is really not a factor of the industry. It's more a factor of what my business needs are and who's satisfying my business needs. So for market infrastructure platforms, we have to redefine the value we bring to the business community to say what really is an enterprise looking to put its business on our platform for. They're not looking to advertise their business. They're looking to raise capital, and what are the efficiency channels by which we can deliver on what they require. So we need to do a lot of introspection and self-correction to be able to point businesses efficiently to where capital will come from, and effectively to where that capital will come from. Costs and fulfillment, I'd call it. So I want to get that money, and I want to get it when I get it at a reasonable price.
Definitely.
So that's, I think, what is playing out on the market infrastructure platforms.
Okay. Thank you so much. Thank you so much, Mr. Egwaide Longe, Managing Director, NESD, for sharing your perspective on the program. It's always good to have you.
Thank you.
So to talk about more equities, major equities, look at the Middle East now and see how they traded at intraday. They were mostly in the red at intraday. We see Abu Dhabi was down 0.43%, Dubai also down 0.54%. Let's see, still within the region, we've seen Qatar and Saudi also down in the reds, red for them there. But look at also in the US, stock futures were mostly higher. We saw that marginal uptick for the S&P 500, the futures, and the NASDAQ futures were up, but the Dow Jones was down 0.31% at intraday. Let's look quickly to Asia, see Asian markets, how they performed at the close. They closed already. We see Dow, the Nikkei, that's in Japan, was down 0.79%. The Kospi in South Korea was also down. The Hong Kong Hang Seng Index was also down. Let's see other markets in that region very quickly. China's market, on the other hand, paired losses was up 0.27%. We see S&P and ASX 200 in Australia down for the close of business today. But Ladi, basically, we've seen markets doing this hip-hop, uppity-duppity, like ding-dong movement.
But as I always say, what Mr. Longe actually alluded to there, said, don't buy the top.
Don't buy the top.
And I keep saying, if you must sell, you have to find the top.
And
but who knows where the top is? where you have to decide
when to enter the market. You have to watch the trend, do your research. And just to talk about very quickly before we leave Asia, Japan has been on fire. It's crossed so many levels in terms of its all-share index. It crossed the 35, 36, 37, though it touched those levels and back to 35. But it's really doing well, despite, you know, starting the year on a bad note.
Right. All-share indexes crossing new highs. It's quite an incredible time. Thank you so much, Will, for the update there for the global markets.